cost of the product here. So that's the reason they're saying that one, charge it to the period with which they are incurred. Means if they are paid, we'll treat them as the expenses. What is the number of units are produced and what is the number of units are there? So based on that, the cost will be identified. Variable costs are those costs which are incurred, and it is a cost where it is going to vary as the number of units is going to be changes. Warm welcome to second sem BCom student. The subject we're discussing, fundamentals of cost accounting. In our previous sessions, we have learned about the meaning of cost, cost accounting, cost accountancy, and even we have discussed about several concepts of objectives and importance of costing. And even we started classification of cost on the basis of time, traceability, period, like this we were discussing. The continuation of classification cost we're going to make in this session, take the advantage and get benefited from the information what we're going to provide. I'm Professor Rajesh L.R. from Department of Commerce and Management from Vidhyaashram College, Temple of Excellence, MYSURU. In today's session, as the thing we have here, association with the product cost can be classified as product cost and period cost. This is a major concept what we are going to discuss. Under that, what are the segregations we have here? See, association with the product cost can be classified as product cost or period cost. So what is product cost here? See, product cost are those which are traceable to the product and included in inventory value. They're saying that one, whatever the amount of expenditure is incurred directly related to the product, which can be identified and recorded to the inventory, then it is called a product cost. In a manufacturing concern, it comprises the cost of direct materials, direct labor, manufacturing overheads. Means I'm saying that when we purchase raw material, we're going to pay carriage inwards, right? So this is my identifiable cost for direct material. Direct labor means wages paid for the people who are working in the production flow. And manufacturing overhead is nothing but factory overheads. Overheads is nothing but amount of expenditure like machinery cost, the indirect material cost, indirect labor cost, indirect expenses, and other related factory expenditure. Product cost is a full factory cost. Product costs are used for valuing inventories which are shown in balance sheet as asset till they are sold. Means always the closing stock value what we record in the books of accounts, that is nothing but product cost in cost accounting meaning. The product cost of goods sold is transferred to the cost of goods sold account. Every time the cost what we have for inventory, it is considered as cost of goods sold. Means in the cost sheet, whatever the amount we are getting for cost of goods sold, that is our product cost. So we have here prime cost, factory cost, office and administration cost, and then we have cost of goods sold. So till here, whatever the value we are going to get, that is called product cost. What are period cost? Period cost are nothing but the amount of expenditure period incurred on number of days continuously, like for example, payment of rent, payment of salaries, all these are my period cost. See here, period cost incurred on the basis of time, such as rent, salaries, included in many selling and administrative costs essential to keep the business running. Though they are necessary to generate revenue, they're not associated with the production. Say, the rent what we are paying, that is not linked with my production here, but even though it is there to generate for the revenue, it is much and more required to pay or incur such type of amount of cost. They are charged to the period in which they are incurred and are treated as expenses. Whatever the amount of rent paid here, that will be recorded here. If you have not paid the rent, still it is outstanding. Those things cannot be added for the cost of the product here. So that is the reason they are saying that when charged to the period with which they are incurred, means if they are paid, we'll treat them as the expenses. Selling and administration cost are treated as period cost for the following. Most of these expenses are fixed in nature. When we start paying the rent here, every month the same amount of rent will be paid for the premises. It is not like that. For every fortnightly, it will be changing. For every 50 days, the rent will never change. So it will be same for long duration. So that's why it's called fixed in nature. It is difficult to apportion these costs to products equitably. They're saying that when it is going to be very difficult for the person who is going to estimate what is the amount should be added for my product cost. So it is going to be very difficult for me. So that is the reason what is the number of units are produced and what is the number of units are there. So based on that, the cost will be identified. It is difficult to determine the relationship between such cost and the product. So we don't know that one, whether the amount of rent what we paid, right, whether it is related to my present product only or not, whether how much I have to consider. So if I want to calculate that one, I should know that one, the production area, how much ever we have here, based on the floor area, right, the rent will be distributed. Then that amount will be added to the product cost. The benefits occurring from these expenses cannot be easily established. So with the support of rent or salaries, whatever they paid here, from that, whatever the revenue is going to be generated, that cannot be estimated. And it can't be constant also. Every time there will be small changes in the value or the cost, what they've earned. Sometimes it will be in the boom level, or sometimes in the average level, or sometimes in the low. But we cannot actually get exactly those things, the benefit what we have received here. The net income of a concern is influenced by both product and period cost. The profit, whatever the firm or the manufacturing industry has earned here, it considers both product cost as well as period cost. By changes in activity or volume of cost can be classified as fixed, variable and semi-variable. So based on the activity, the cost is been divided into three concepts here: fixed cost, variable cost and semi-variable cost. Fixed cost are those costs which are incurred for long run as a stagnant value fixed for the period. Variable cost are those costs which are incurred, and it is a cost where it is going to vary as the number of units is going to be changes. If 1000 unit, the variable cost will be, assume that if it is 1000 units, okay, units, if my variable cost is 10, so it will be 1010, 10,000. If I produce 900, it is going to be 9,000. If I produce 11,000, it is going to be 10 into 11, 1 lakh 10. So the variation is here. That is why it's called variable cost. The cost which is going to be fluctuate based on the number of output. Semi-variable, a small changes in my fixed and variable. That is my semi-variable cost here. First, we'll consider fixed cost. Say the Chartered Institute of Management Accountant, London, defines fixed cost, the cost which is incurred for a period and which within certain output and turnover limits tends to be unaffected by fluctuation in the level of activity. They're saying that one, even though if you produce 1 unit, I have to pay 10,000 rent. Even though if you produce 1 lakh unit, I have to pay the same rent here. There is no changes in such a way that if I produce 1 unit, it is 1 lakh. If I produce 1 lakh units, it is going to be 10 lakhs or 50 lakhs. It is not like that. The rent, what we're going to pay, will be stagnant. Whatever the output, it may come for me. Either whether I'm going to produce per day 10 units or per day 10,000 units, it never makes any changes in my payment of rent here. So that is called my fixed cost here. These costs are incurred so that physical and human facilities necessary for business operations which can be provided. They're saying that one, without the place and without the employees, we cannot do anything. That's the thing we say that one, we require the M. M is nothing but money, men, material, machinery, market, like this. All the M's are very important for the business here. So in that part, we're discussing about money and the place where we are going to occupy for the purpose of production. These costs arise due to contractual obligations and management decisions. They arise with the passage of time and not with the production. They're saying that one, as the number of days is going to be moving here, so the rent is going to be paid for each and every day, and whatever the utilization has been made here. It is not like that if I have a production, I have to pay the rent. If there is no production, no rent. It's not like that. Even though you produce or not produce, you have to pay the premises rent every month. That is why it's called fixed here. Insurance, supervisor salary, etc. It is wrong to say that fixed costs never change. They're saying that we are not saying that it is not going to change. But for certain things or in certain stages, it is going to remain constant here. It may fluctuate only when there is small increase in the amount of rent what we are going to pay. Either it may be for yearly once or 2 years once, a small change. But even though after increase, again, the change in my fixed cost will be only after certain number of months, not every day or fortnightly or monthly. Fixed cost can be classified into the following categories for the purpose of analysis. Committed cost. See, the fixed cost, even it is called committed cost. Committed means if I take any premises for rent, it is my commitment to pay that rent. That is called committed cost here. These costs are incurred to maintain certain facilities, cannot be quickly eliminated. The management has little or no discretion in this cost. Example, rent and insurance. See, both are required in the business here. The rent and the insurance for the safety. The rent for production purposes, the insurance for safety. Both are incurred here and it is compulsorily required. I cannot ignore that one. But this is going to remain constant for long run. If I take a policy here, insurance policy on the premises, it is going to remain constant for long run. So, on what basis we are taking, whether it's a first party insurance, third party insurance, or for what purpose we are making the payment, and for on the life of the employee or on the safeguarding the property and other equipments of the business. So if you have taken on the property, it is called as general insurance. If it is taken on the employee, it's called life insurance. So when we take any insurance policies for the business here, so it is only for the safety and security, and that is going to be compulsorily have to pay that amount for the benefit of the organization only. I cannot ignore that one. I cannot say, let me stop that one immediately. If you stop that making payment, automatically we have to vacate the premises here. Instead of that, when you start anything, it is committed. Policy and managed cost. Policy costs are incurred for implementing particular management policies, and managed costs are incurred to ensure the operating existence of the company staff services. So now, next we have a policy cost and managed cost. Here, managed cost is nothing but for getting the benefit of the services to the staff here. So we are going to incur some amount of expenditure, that is my managed cost. What is my policy cost? This is the cost which are incurred to frame certain rules and regulations for the internal and external purpose of the management activities. So at the time of framing that one, whatever the amount has been incurred here, that should be paid. And this policy cost, whatever we're going to pay, it is for long run and it's going to be stagnant here. The person who is giving advisory for the organization, for him, every year I have to pay 10,000 means it is going to be 10,000 for long run. Next we have here variable cost. After my fixed cost, next is variable cost. Variable cost are those costs that vary directly and proportionately with the output, direct materials, direct labor. It should be kept in the mind that variable cost per unit is constant. For one unit is same, but as the number of units changes, automatically the cost is going to change. For example, I said variable cost per unit is 5 rupees. If it is 500, 600, 800 units or 1000 units, say 5 into 5, 2500, 3000, 4000, 5000. As the units are increased here, the variable cost also changed here. Means the cost when it changes as the number of units, either it's going to increase or decrease. That is my variable cost here. And even as the number of units are changing here, based on that I have to make the payment of wages for the laborers. If I'm going to pay 2 rupees for laborer, 500 into 2, 1000 rupees. 600 into 1020. See, there is a small changes here. As the number is going to change here, the payment of wages is also going to change here. Management decision can influence the cost behavior pattern. The concept of variability is relative. If the conditions upon which variability was determined changes, the variability will have to be determined again. Means based on the concept what you are going to adopt, and if the management is going to agree to make the certain equal amount of portion of wages for the laborers, then there will be no variations. Or else if the methodology what they are going to adopt for making the payment of wages, there will be small fluctuation in the payment of wages. Next we have a semi. Semi means small changes in my fixed or variable cost. Such cost can contain fixed and variable elements. Semi-variable costs change in the same direction as that of output, but not in the same proportion. They're saying that one is going to change according to the direction of the same, but not on a proportion. The same level of changes will be there in my fixed and variable. Depreciation is an example. For 2 shifts working, the total depreciation may be only 50% more than that of for single shift working. The same that when you're working for 2 shift here, like morning shift and night shift, so when depreciation is charged here, it is going to be changed here for morning shift as well as night shift. And the same thing, if we have only 1 shift there, the amount of depreciation will be differ when we calculate on the shift basis. They may change with comparatively small changes in output, but not in the same proportion. So here, a small changes will be there in my fixed as well as variable here, and it cannot be equal in the proportionate, but normally the amount will be same equal, but division part, a small changes will be made in the fixed as well as variable. Next we have here functional classification. The cost can be classified based on the functions. So now in that we have here production cost. So what is production cost? It is a cost operating the manufacturing division of an undertaking. It includes cost of direct materials, direct labor, direct expenses, packaging, and all overhead costs which are related to my production. That is nothing but prime cost, factory cost, office cost, administration cost. All this cost included is called my production cost. What are administration cost? They are indirect and covers all expenditure incurred in formulating the policy, directing the organization, controlling the operation, which is not related to research, development, production, or selling function. So administrative is totally differ from the cost which are added for other concept here. Administrative cost is a cost which are incurred in such a way to frame the rules and regulations for the business activities, either internal or external part here. For that reason, the cost which is not included in any other concept like production or selling cost or in any other cost like direct material, direct labor, and that the prime cost what we have here, we're not going to include any policy formulation cost here. It is totally different from other costs which are incurred here. That is the reason it is going to be considered separately with the name called administration cost. And next we have here selling and distribution cost. Selling and distribution cost is a cost which are incurred by each and every business unit or the manufacturing concern for promoting its products and distribution of products to the market for the needy people here. Without communication, the product cannot reach the consumer. Without communication, the consumer will never buy any type of product here. That's the reason now we have to communicate and promote the product in such a way that where it reaches to all the consumers and the customers and the person who requires that particular product. Selling cost is the cost of seeking, create and stimulate demand. Example, advertisement, market research. Already I said that one. If I want to sell my product, it has to be communicated. Communication may be through advertisement. Advertisement, it may be tele-advertisement, or it may be next visual advertisement or print media advertisement. So here different types of advertisement categories are there where I want to communicate about my product in such a way that it convinces the people who want to buy or consume my product easily and which are marketed to the people for whom it is required. Distribution. It is an amount of expenditure which begins with the package. Means if I want to supply the goods here to my market here, the distribution starts from the packing, packaging and other activities till it has been used by the consumer. It includes expenditure of transportation, either it may be central or local storage, expenditure incurred in moving articles, prospective customers as in case of goods on sale on return basis also is called as distribution cost. Say if the goods are returned for due to some damages or not satisfied, the cost will be included in the distribution. Next we have here research and development cost. Every business organization at the time of starting any business here, it has to make a certain research whether the product what we are going to sell in the market, on what basis we have to sell, whether what size it should be there and what type of quality it should be there and what type of raw material should be used for our product and how to make packing and attracting the people to buy that product. And even if it is not communicated properly, the consumers or the customers have to identify the product and buy easily in the market. So, which supports them with the creation of brand, labeling or grading the product and the price what we have mentioned and the ingredients and the use of the product, everything will be recorded here. So I have to make certain research in such a way that whether my product can be sold if it is going to be produced in different concepts, different style, different passion. So for this, what is the cost has been incurred to develop all these ideas, what we have paid for the advisory committee. Next we have here the research. When the new factory is going to be started, there are trial runs. Such costs are termed as pre-production cost and deferred revenue expenditure. They are charged to the cost of future production. So whatever the amount of expenditure is incurred, that is called cost of future production, and that will be added in the upcoming cost of the product. Next we have here relationship with accounting period cost can be capital and revenue. Capital expenditure provides in such a way that benefits to the future period and is classified as an asset. When you are going to incur any amount of expenditure for long run and which are going to buy any property for the business year, that is my capital expenditure. As and when the asset is written off, capital expenses to that extent becomes cost. Only when capital and revenue is properly differentiated, the income of particular period can be correctly determined. So, when you record the information in the books of accounts, what is your actual capital expenditure and revenue expenditure, then only you can identify where you're standing exactly at now. If there is no identification of your capital expenditure and revenue expenditure, the company cannot never give the actual amount of financial position as on today. Next, we have here controllability cost, where we have controllable and non-controllable. Certain costs are there in the business process which can be controlled by all the business activities, and certain costs are there which cannot be controlled, and there is no controllability in the hands of the business here. So what is that one? Control cost which can be influenced by its budget holder. Non-controlled level of managerial supervision, or the difference between the terms, very important for the purpose of cost control, and responsibility accounting. Like the fluctuation, what happens in the market, we don't have anything here controlling of those costs here. So that is non-controllable cost for me. The expenditure, sometimes what is going to happen in the organization on suddenly. So that is non-controllable. Like due to some power fluctuation, suddenly the panel board has been got damaged here. So now the management is not in such a way that one where it is kept ready. If anything happens, immediately it can be replaced. But due to more fluctuation of the power, due to more changes in the power supply from the board, so this has happened here. So this is my non-controllable cost. It was not in my hands. Suddenly the cost has been incurred. So that is my cost. If I would have known that one, a small changes in my power will fluctuate my panel board. So then I'm going to have other facilities for that one, where it avoids to stop to send the extra power to the panel board here. So if I take that one, so now if I have a thought of that one, I have controlled the expenditure here. So next, a controllable can be controlled by a person at given organization level, are not totally controllable. Example, maintenance cost, maintaining the manager, and non-controllable cost often used to mean variable cost. Non-controllable costs are as fixed. So here controllable and non-controllable is nothing but variable and fixed concept. They have made it here. Certain things are there which can be controlled here with the proper supervision, or if it is not that one, definitely it cannot be identified properly and controlled by all the business people. Thank you to all our second sem BCom students. In today's session, we just came to know that one, cost according to functions and cost according to controllable, non-controllable, and even period cost and product cost, and committed cost, and even what are the other costs we have in the cost concepts. Thank you again for all our second sem BCom students.